Welcome, curious minds, to the deep dive. Today, we're really getting into the weeds on Adani Total Gas Ltd, or ATGL, specifically their performance in quarter one of fiscal year 2026.
That's right. We've got the official reports, the releases, investor decks, the whole lot.
Exactly. And our mission here is to see what these documents really tell us about ATGL's role in India's energy shift. We want to pull out the key bits, maybe find some surprises.
Sounds good. There's definitely a story in these numbers.
Okay, let's unpack this then. Starting with the big financial snapshot for Q1, the top line numbers, well, they look pretty good.
Yeah, revenue from operations jumped, what was it, 21% year over year, reaching almost 1,500 crore INR.
Right, nearly there. And that was driven by a solid bump in overall volume, up 16%. That feels quite robust for a quarter.
It does, but here's where it gets interesting, maybe a bit puzzling even.
How so?
Well, you see that strong revenue, that strong volume growth, but then you look at profitability, EBITDA, profit after tax. They actually dipped slightly.
Oh, okay, so EBITDA was around 301 crore.
Yep, 301 crore, standalone and consolidated, basically the same. But that's down like 1-2% compared to last year.
And the profit after tax, the PAT?
That saw a bigger drop, around 165 crore consolidated, which is down 4%. Standalone was down even more, about 8%.
Huh. So that's the immediate question, isn't it? Volume's up, revenue up, but profits are slightly down.
Exactly. That's the core tension we need to figure out.
So what's the first thing that comes to mind? Why would that happen?
Well, my immediate thought goes to costs, input costs maybe, or perhaps they're in a heavy investment phase, spending more.
Okay, that makes sense.
And actually, the operational highlights kind of give us some big clues there.
Perfect segue. Let's dig into those operational numbers then, because they definitely show where that volume growth came from.
Right. They've clearly been busy expanding.
Absolutely. The core city gas distribution, the CGD GIVNUS, their CNG network hit 650 stations. They added 3 new ones just in Q1.
And that drove a big jump in CNG sales volume, right? Up 21% year over year. That's 185 MMSCM. Huge number.
Huge. And then there's PNG, the piped gas to homes. They're almost at 1 million connections now, 9.90 lakh.
Wow.
Added over 26,000 new homes just in the quarter. That pushed PNG sales volume up 6% year over year.
Okay, so steady growth there too.
Yeah, and even industrial and commercial connections grew, over 9,400 customers now. Plus, the physical pipes in the ground, the steel pipeline network.
The inch kilometers, yeah, that metric gives a sense of capacity.
Exactly. It's around 14,200 inch kilometers now, cumulatively. They added quite a bit this quarter, too. Really shows the scale of the infrastructure build.
And remember, that's just ATGL on its own.
Yeah.
If you factor in their joint venture, IOA GPL.
Indian Oil Adani Gas Private Limited.
Right. The picture gets even bigger. The combined network is over 1,000 CNG stations now.
1,000. Wow.
Total PNG homes, including the JV, over 1.17 million. They added 35,000 new households together in Q1.
Okay.
Combined industrial customers, over 10,600. And the combined steel pipeline network, almost 26,000 inch kilometers.
So the expansion is just massive across the board. They're physically building out their presence everywhere.
Aggressively. It really paints that picture of infrastructure being laid down across India.
But it still brings us back to that profitability question, doesn't it? All this growth. Why the slight dip in profit?
Well, that aggressive build-out and the profit dip, they're definitely connected. It leads us straight back to the cost of gas.
Ah, okay. The input cost.
Exactly. The cost of natural gas went up significantly by 31% year over year. That's a big jump.
31%. Okay, why such a big increase?
The main reason they point to is getting less of the cheaper government-allocated APM gas and price mechanism gas, especially for the CNG segment.
Right, that's usually the lower cost gas that helps keep pump prices down.
Precisely. The allocation was only 43% for CNG, maybe around 61% if you combine it with new well gas, which is also regulated but priced differently.
So they had to fill that gap with more expensive gas.
You got it.
Yeah.
They had to use more of the higher-priced new well gas, NWG, and also market-linked high-pressure, high-temperature gas, HPHT.
I see. So their sourcing mix changed. What does that mix look like now?
It's pretty diversified, which is smart in volatile markets. They get about 38% APM, then 25% from HPHT sources, another 25% from RLNG contracts.
RLNG being regasified liquefied natural gas.
Correct. Plus about 10% NWG and a smaller chunk, 8% from the spot market. It gives them flexibility but exposes them to price swings too.
So facing these higher costs, what did ATGL do? Did they just pass it all on?
Not entirely, it seems.
Yeah.
They describe their approach as calibrated. taking a calibrated approach to pricing.
Calibrated, meaning try not to scare off customers.
That's how I read it. It suggests they were balancing things, trying to keep
Right.
volumes growing, keep expanding their market share, maybe absorbing some of the cost hit themselves rather than passing it all on.
So maybe prioritizing long-term growth over maximizing short-term profit.
Seems like it. Management actually highlighted achieving sustained, stable EBIT despite those sharp gas price hikes. They emphasized reliability of supply and prudent pricing.
Prudent pricing. Yeah, that sounds like a long game. Betting on future scale.
Exactly. And it's not just about gas anymore, is it? They're moving into other areas too.
Right. The diversification, that's a huge part of their story now, into new low-carbon stuff.
Like the EV charging business, ATEL, Adani Total Energy's e-mobility.
Yeah, they've been expanding that aggressively. Over 3,800 charging points now. Across 26 states and UTs. Added 400 points just in Q1.
That's quite a footprint already. Nearly 40 megawatts installed capacity.
And then there's the biomass side, ATBL, Adani Total Energy's biomass.
It's happening there.
They just commissioned their first CBG station compressed biogas. It's a DODO model, dealer-owned, dealer-operated, in Haryana.
Okay, so producing biogas.
Yeah, and it's not just the gas. They sold 50 tons of CBG, but also packaged up over 95 tons of the byproduct, fermented organic manure, FOM, plus over 1,400 tons of loose FOM.
Ah, so a bit of a circular economy angle there too, using the whole output.
Seems like it. And speaking of expansion and synergy, that GOBP partnership sounds pretty significant.
Oh, yeah, that's a big one. Tell us about that.
Well, ATGL and GOBP signed a deal. So some ATGL outlets will start selling GOBP's petrol and diesel.
Okay.
And importantly, within ATGL's licensed areas, some GOBP outlets will get ATGL CNG pumps installed.
Oh, okay. That's a smart way to rapidly expand the CNG network, leveraging existing locations.
Exactly. They expect it to really speed up, adding both DODO and CODO company-owned, dealer-operated CNG stations across all their 34 direct geographical areas.
Makes perfect sense. Use existing infrastructure, reach more customers faster. Very clever.
It really feels like they're building multiple pillars for the future. And speaking of pillars, sustainability, ESG seems to be another one they're emphasizing.
Yes, environmental, social, governance. It's becoming critical for companies like this, and their ratings have improved, right?
They have. Crystal bumped their ESG rating up, moving them into the strong category, and their DJSI score improved too, putting them in the 80th percentile.
That's good to see. But beyond the scores, what are they actually doing?
Good question. Well, the reports give some concrete examples, like helping over 630 heavy truck fleets switch to lower carbon fuel.
Okay, that has a real impact. Decarbonization in action.
Right. And they're installing rooftop solar on their own stations, nearly a megawatt cumulative capacity now, reducing their own footprint.
Smart. What else?
There's a Green Mosphere initiative planning to plant 50,000 trees. On the social side, they hit over 1 million safe work hours and did a lot of safety training.
Safety is crucial in this industry.
Absolutely. And community stuff, too, like an eye checkup program for 25,000 students via the Adani Foundation.
So it's woven into operations, not just a separate report.
It seems that way, which all feeds into their wider strategy and, the investment case they're making.
Which looks pretty solid on paper based on past performance and current health.
Yeah, I mean, look at the growth track record. 13% Adjaniron EBITDA, 8% in PAT between FY20 and FY25. That's consistent performance.
And the balance sheet looks healthy, too.
Very. Net debt to EBITDA is just over 1x. Gross debt to fixed assets is low, around 33%. That suggests they aren't over-leveraged, have room to borrow more for growth if needed.
Strong financial footing, then.
Yeah.
And their market position is undeniable.
Definitely. That pan-India presence, 53 geographical areas directly or via the JV, covering over 14% of India's population, it's huge.
And having both Adani and Total Energies as equal major shareholders, 37.4% each, that brings huge synergies, right?
Absolutely. In project execution, getting fuel source reliably, running operations, that partnership is key.
Plus, they seem to be leaning into tech, digital platforms, apps.
Right. They mentioned SOL, which sounds like a central monitoring system using SCADA and GIS, and the My Adani Gas app for customer self-billing payments. Apparently over 98% of collections are digital now.
Very efficient. So how does all this tie into India's bigger energy picture?
Well, it positions them perfectly, doesn't it? To help India hit that target of getting natural gas up to 15% of the energy mix by 2030, from around 7% now.
Yeah, they're building the exact infrastructure needed for that transition.
And they frame their whole strategy around these 5 pillars. Remember those?
Vaguely. Refresh my memory.
Okay, so Gainful diversification, that's the EV, biomass, LNG stuff. Customer centricity, people digitalization, focus on core strength, shoring up the main CGD business, and leveraging technology.
Right, right. Those five. It covers all the bases we've been talking about.
It does. Which leads to the question, I guess, how well do these pillars really set them up for sustained growth, given how fast the energy world is changing?
That is the key question, especially with all the external factors they also have to navigate.
True. No company operates in a vacuum. We should probably touch on some of those challenges and regulatory things mentioned in the reports.
Definitely. Gives the full context.
Okay, so the regulator, PNGRB, changed some pipeline tariff rules. They reduced the number of zones, extended the cheaper Zone 1 tariff across India for CNG and home PNG. That's aimed at making gas more affordable, right?
Yeah, that should generally help demand, potentially,
Mm.
though it might impact transporter margins differently.
And there are still some pending approvals, like the final go-ahead for the Ludhiana and Kutchis areas they acquired. That's still in process.
Standard stuff in acquisition sometimes. It takes time.
And a few ongoing legal things. An appeal about deemed authorization in some areas near Ahmedabad, another appeal about Noida. The usual kinds of regulatory disputes.
Right, and they noted no financial impact is booked for those yet. Standard
Yeah.
practice.
Yeah. And one more thing mentioned was regarding a non-executive director, an indictment in the U.S.
Yes. The reports mention an indictment by the U.S. DOJ and an SEC complaint related to alleged securities fraud conspiracy against one non-executive director.
But crucially, the report emphasizes ATGL itself is not named in these matters.
Correct. And that there's no financial impact on ATGL's results from this. It's an issue related to the individual, not the company's operations or financials as reported.
Important distinction. So these are the kinds of external pressures and complexities a big player like ATGL deals with.
Absolutely. It's part of operating at that scale in a critical, regulated sector like energy. It just shows the full picture.
Okay. So wrapping this all up then, what's the main takeaway?
Well, for me, it's a picture of really significant operational growth, massive infrastructure build out. They're physically expanding rapidly.
Right, and strategically diversifying into these new areas, EV charging, biomass, future-proofing maybe?
Definitely looks like it.
Yeah.
Plus, a strong stated commitment to ESG, backed by improving ratings and concrete actions.
But all while juggling those rising gas costs leading to that slight profit dip and navigating a complex regulatory world.
Exactly. They're managing growth, costs, and external factors pretty actively. It's a dynamic situation.
It really is. A company clearly foundational to India's energy plans, but with challenges to manage.
For sure. Strong base, clear ambitions.
So as we finish this deep dive, maybe here's a final thought for you, the listener, to chew on.
Go on.
Given ATGL's strategy, that aggressive expansion combined with diversification and that calibrated pricing approach, how effectively do you think this combination will actually accelerate India's energy transition, especially when it comes to getting cleaner energy options like gas or EV charging to that final last-mile consumer across the country?
That's a great question. How deep and fast can that transition really go at the consumer level?
Yeah.
Something to watch.